Hello everyone. Today I will be talking about the accounting cycle of a service business. But before we start, let me introduce to you our learning objectives for this topic. Number 1, prepare the worksheet. Number 2, prepare the closing entries. Number 3, prepare the balance sheet and income statement of a service business. And number 4, preparing the reversing entries. Prepare the reversing entries. Let's start with the worksheet. What is a worksheet? A worksheet is an analytical device used to facilitate the gathering of data for adjustments, the preparation of financial statements, and closing entries. Let me introduce to you the parts of the worksheet in my next slides. First, we have the heading. So in our example, the heading should contain the name of the company. In our case, is ABC Company. And then the name of the report is worksheet, and then the date covered by that report. So for the period ended December 31, 2020. Then we now proceed to the columns in the worksheet. We have the first column for the account title column. This is where you need to list the account titles. The second column contains the unadjusted trial balance. So this is where you need to place the different amounts from the unadjusted trial balance. Then we have the adjustments. This column, it is where you post the amounts in the adjusting entries, or from the adjusting entries. And then next we have the adjusted trial balance. This is where you are to post the combined amount of the unadjusted trial balance and the adjustments. Then next column, we have the income statement column. This is where you extend the amount or the nominal accounts, or those amounts involving income statement accounts. Then the last column, you have your balance sheet column. This is where you extend all the real accounts. So we're now to proceed or to start with our example. So we have a given trial balance here of HPP, refrigeration, and air conditioning services. So from here, we will prepare the worksheet. And we are also given the items for adjustment. We have 1, 2, 3, 4, 5, 6 items. And on the right side, you have there, or we have here, the adjusting entries. So since we have discussed already how we prepare the adjusting entries, there's no need for me to discuss this one. So let's proceed directly to preparing the worksheet. So to start, you need to transfer the data from the trial balance to your worksheet. So post now or write all the account titles under the account title column, and then copy the amounts from the trial balance. Observe the same debit and the same credit. After that, you get the total, single rule, and then double rule. Next, we are now to work with the adjustments column. So what you need is to post your adjusting entries in the adjustment columns of your worksheet. So the first adjusting entry is a debit to interest expense and a credit to prepaid interest expense. So what you will do is, the first that you need to post is the interest expense account. So what you do, or what you will do, is look in the account titles column whether the interest expense account has existed already. And then if you have noticed, we don't have any interest expense account here. So you need to provide an account title for that. So after the total, you may place their adjustments to identify that the items that you have to place here are adjustments or adjusting entries or adjustments figures. So first, you have your interest expense. It's a debit, so extend the amount to the debit column of your adjustment. Then your credit is prepaid interest. And notice that in the account title, we have already a prepaid interest account. So you just have to post under the adjustment columns, credits side, 280,000. Okay, so that is for the first item for adjustment. Next, number 2, our adjusting entries: a debit to office supplies expense and a credit to office supplies. So look for an office supplies expense account, and then notice na it's not there, so you need to provide, and then post the amount under the debit side of the adjustment column. Then look for office supplies. Notice na it's there already, so there's no need to provide. So what you do is post 360,000 on the credit side of the adjustment column. Next, we have a debit to depreciation expense. Notice that depreciation expense is not available yet, so you need to provide. So number or letter C now is depreciation expense, debit side of the adjustment column, and then a credit to accumulated depreciation. So look for the accumulated depreciation, so it's there already, so just post on the credit side of the adjustment column the 320,000. Next adjusting entry is a debit to salaries expense. Notice that salaries expense is already in the account title column. So you just post 280,000 debit. Then a credit to salaries payable. We don't have any salaries payable yet, so we need to provide a new account title for salaries payable. Then post the amount on the credit side of the adjustment column. And then next, we have utilities expense. Notice there is already a utilities expense account in the account titles. So you just post the amount on the opposite side, debit side of the adjustment column, 120,000, and then provide for utilities payable since it's not available yet. So utilities payable on the credit side, 120,000. So we're done with our posting. So after posting, get the total of all your amounts in the adjustment column. So get your total debit and get your total credit. Make sure the two amounts should equal. So get the total is 1,440,000, and on the credit side we also have 1,440,000. Next, we are now to work with the adjusted trial balance. So what you will do is you are now to combine the unadjusted trial balance amounts or figures and the adjustments column figures. So we'll start. For cash in bank, we don't have any change or changes. So you just copy the amount. Observe date, the same debit, the same credit for those with no changes. Then we have accounts receivable 1,800,000 extend. Then we have or copy. Then we have prepaid interest, debit, and we have a credit in the adjustment column. So this time now, the postings are opposite. Under the adjusted trial balance column is a debit, it's in the debit side, and then in the adjustment column it's on the credit side, so it's opposite. So what you will do is determine the difference between the two, and then whichever has the higher figure should be the basis whether or should be your basis in posting the difference in your adjusted trial balance column. So since debit has the highest or the higher amount, then the difference of 440,000 should be posted on the debit side of your adjusted trial balance. Then we have the same scenario with office supplies. So debit has a higher amount rather than credit. So the 180,000 should be posted on the debit side of your adjusted trial balance. Then we proceed to your shop equipment. Your shop equipment don't have any changes in the adjustment column, so you just copy the amount. Then for the accumulated depreciation shop equipment, we have a credit in the unadjusted trial balance and the same credit in the adjustments column. In this case, if they are having the same posting or the same credit, then we add the amounts. So 1,280 plus 320, we have 1,600 credit side. Then for the accounts payable, we have no changes or no change or no posting, so just copy. Then for unearned shop revenue, we have an opposite posting. So in the adjusted trial balance, it's a credit of 240. And then in the adjustment column is a debit of 200, rather 80,000. So you just get the difference and then post on the credit side since it has the higher amount of 160. Now, so post it on the adjusted trial balance credit. For notes payable, you don't have any change. So post it or copy it 1 million to the credit side. Your capital has no change, you copy it. Then your drawing also is the same, so just copy. Your shop revenue has both credit posting, so you add, it's 13.1. Then your salaries expense also has the same debits, so you add also, make it 6,820. And then your rent expense don't have any changes or change, so just copy. Insurance is 500, no change, copy. Then your utilities expense, you have the same debit, so you add. It may make it 440,000. Then miscellaneous, no change, just copy. And then don't forget we still have items in the adjustment below. So you just observe whether it is a debit or a credit. So interest expense is a debit, so copy on the debit side. Supplies, office supplies expense has a debit, just copy. Then depreciation also copy. Then this time salaries payable is a credit, so copy. And then utilities payable, the last item, copy. So after all has been posted, you need to single rule all the items, by the way. So before you add, you need to single rule the last item to indicate that it's the last item that you need to enter in a column. So you single rule and then get the total. So for your debit, you have 18,880,000 and your credit has 18,880,000. Make sure it has different or both contains the same figure. The moment you get another amount here or the other side, then there's a possibility that you committed error in doing the posting. Okay, so that's how you are to prepare the adjusted trial balance. We now proceed to preparing the income statement. When you prepare the income statement, just focus on the adjusted trial balance column. And since it's income statement, forget the items at the top. Just focus your attention from here, from the sales or the shop revenue of 13,100,000. So extend it to the credit side of the income statement because what you will be dealing here should be all nominal accounts. So we have shop revenue 13,100,000, and then just extend all the expenses to the debit side or copy the expenses to the debit side. And then after that, get the total. So single rule and get the total. So for the total, don't expect that they would have the same amount. So there should be a different figures that would come out here. So your credit is 13.1. Then add all your debits. It will give you 10,800,000. After that, get the difference. That's 2,300,000. Okay, so just leave it there. We now proceed to the preparation of the balance sheet. So this time, your focus would be from cash to drawing or owner's drawing. So what you will do is just copy the amount. So copy, just observe the same debit postings and credit postings now. So um, you have all the debits, just copy it to your balance sheet. Then all the credits, copy it to your balance sheet. After that, get a total. So your total debit should have 8,080,000, and then your total credit should have 5,780,000. Then get the difference. It should give you the same amount with your income statement. Okay, so the moment you get the same amount, more or less you are correct. But the moment you get a different amount here, so I think there has to be an error when you are preparing the items here. So this time we have the same amount, so it's okay. So what we'll do next is determine where to post the 2, 3. Okay? So what we will do is just determine the column which contain a lower amount, and this is where you post the difference. So for the income statement, 2, 3, the left side or the debit side of the income statement has a lower amount, so it has to be posted on the debit side. While in the balance sheet, the credit side has a lower figure, so it has to be posted on the credit side. So what does it mean when the scenario is like this? Now, note that if your credit side in the income statement contains a higher amount, remember this column is a revenue column, and the debit side or the debit column are expenses column. So it's understood that the revenue is more than the expenses. So there is a net income after the end of the period. No? So there is an income, or the result of the operation is a net income. While in the balance sheet, you will know that it's an income when the debit side of your balance sheet contains a higher amount than your credit side. So take note that these are assets. This is an asset or assets column, and then this is your liability and capital column. So it's kung more ni siya na side, then the result also is an income. Okay? But the moment it will be an opposite. So like the income statement would contain a lower amount under its credit column, the higher in its debit column, then it's a loss. At the same time, sa balance sheet, if it's a loss, the credit side will contain more amount than the debit side. Okay? So after placing na the difference, get the total. So it has to be the same amount. So for the income statement, it's 13,100,000 both, and then for the balance sheet, it has to be 8,080,000. Then double blue. So this is how you prepare the worksheet. So after this, we'll now be preparing the financial statements. So what are the financial statements, or what are financial statements? These are the end product of the accounting process. Then the preparation of the financial statement is greatly facilitated by the worksheet. Okay? So first we have the statement of profit and loss or income statement. This shows information on income and expenses, and consequently the profit and loss for the period. It shows the result of the operations of the business at the end of the given period. So this is how you need to prepare, or you are to prepare your income statement. So how will you do it? So first you should name, or you should have the heading. So the heading should be placed at the topmost center of your income statement. So the heading should contain the name of the company, then the name of the statement, and of course, don't forget, should be for the year ended. So you have for the year ended, or for the period ended. So for the year ended, December 31, 2019. So in preparing your income statement, your basis should be the income statement column of your worksheet. Okay? So you start with your shop revenues is 13,100, and then less all the operating expenses. How will you present the operating expenses? It has to be according to materiality, and your last item should be the miscellaneous expense. So add all the operating expenses. So you have single rule, then extend add. Deduct it from your shop revenues. 13,100,000 minus 10,800,000. Then you get your net income of 2,300,000. Actually, this is amount that we have in our worksheet. Okay. So then we have, actually it's not part of the book's discussion, but I need to prepare this one because this will help us determine what amount do we need to present in the balance sheet, no, for the capital account. So you have it, the statement of changes in equity shows a change in the capital account at the end of a period, should be at the end of the period. Then the capital account may be affected by net income, net loss, additional investments, and owner's withdrawal of investments. So this is how you prepare your statement of changes in equity. I have an error, I'm sorry. So you have the name of the company, name of the statement, and then as of December 31, 2019. So we have triple D capital beginning 2,240,000, add our net income computation, that's 2,300,000. So the total of 4,540,000. It should be here. Okay, then you deduct drawing 1,400,000. So we have Bisario capital, supposedly Bisario capital of 3,140,000. Okay, then we have the statement of financial position, so or otherwise known as the balance sheet. It is a financial statement that reports on the company's assets, liabilities, and equity. And there are two formats of a balance sheet. So you may use the account format and the report or the report format. So I will be showing you first the report format. So this is how you do it. So you start with, again, the heading. It has to be the topmost center of your balance sheet. So you have HBB, refrigeration, and air conditioning services. Then you have statement of financial position as of December 31, 2019. Okay? So, walang na ako'y error. I was not able to change the name of the company. The name of the owner in a way. So we have start with your current assets. So we have cash, 420,000. So when you prepare this one, your basis should be the balance sheet column of your worksheet. You just have to copy the figures there. So we start with your cash for 20. You have accounts receivable 1,860,000. Prepaid interest 440,000. Then office supplies 180. Get the subtotal. It's 2,900,000. Then get also the figure or your shop equipment from the worksheet. It's 3,780 less accumulated depreciation 1,600. Our shop equipment should be presented at net book value. So add your total assets 5,080,000. Then we proceed to your liabilities and capital. So since you only have current liabilities, I just presented or enumerated them here. So we start with the accounts payable of 380,000. Then we have notes payable 1 million. We have salaries payable 280,000. We have unearned revenues 160,000. And then we have utilities payable 120,000. Get the subtotal is 1,940,000. Then you add your capital based on our computation in the statement of changes in equity of 3,140,000. So I just got an error here. I'm sorry. So we have a total liabilities and equities of 5,080,000. Okay, so this is the report format of a balance sheet. The next format I would be presenting is the account format. So you have noticed that the format pattern that the accounting equation. So we have assets on the left hand side and liabilities and capital on the right hand side. So that made the difference between the report format and the account format. So we have the same figures. Okay, so that's it. Those are your financial statements. So we now proceed to the closing entries. So what are closing entries? These are entries prepared at the end of the period to zero out all nominal accounts. This is done so that the transactions during the period will not commingle with the transactions in the next period. And the preparation of closing entries is also referred to as closing the books. So what do we need to close? We need to close our nominal accounts. So your basis in preparing the closing entries is your income statement account, rather your income statement. So first, we need to close our revenue or shop revenue to income and expense summary. What is an income and expense summary? This is a temporary account, no, that we will use in order to facilitate the closing of the nominal accounts. So how do we close our shop revenue? To close, we need to, since shop revenue it has a credit total, rather has a no has a normal balance of credit. So to close it, we debit. So we debit shop revenue and then we credit income and expense summary 13,100,000. Then after that, we close all our expenses account to income and expense summary still. So we replace all our expenses account by the income and expense summary, a total of 10 million. I think it's 10,800,000. Sorry for the error. It's 10,800,000. And then we credit salaries expense 6,820,000. Just refer the total in your income statement, please. Okay, I committed an error in writing the amount. So we have a credit for credits. We have salaries expense 6,820,000, rent expense 1,920,000, insurance expense 500,000, utilities expense 440,000, office supplies expense 360,000, depreciation expense 320,000, advertising expense 280,000, miscellaneous expense 180,000. So after preparing the two closing entries, your shop revenue now will become zero. The amount will be transferred to income and expense summary. And then your expenses accounts also will be zero out, and the amounts will be transferred to your income and expense summary. So right after the two closing entries, your income and expense summary would have a credit entry on its on its credit side. We'll have an entry on its credit side of 13,100,000 and an entry on its debit side of 10,800,000. Okay, so after that, since it's just a temporary account, you need to close the income and expense summary to capital. So this is how you do it. Number 3, to close income and expense summary to capital. So debit, because after you have posted all the two entries on your income and expense summary, your income and expense summary by this time will have a credit balance of 23. So since credit balance, you need to close it or you need to zero out your income and expense summary. So you need to debit it by 23. So debit income and expense summary 23, then close it to your capital. So yeah, Pisario Capital or Triple D Capital ako nagamit in my previous Pisario Capital 23. Then to close drawing account to capital, I'm sorry for the confusion na I'm referring to one lang, it's capital account. So next we have number 4, close drawing account to capital. Okay, so we have Pisario Capital 1-4 and then Pisario Drawing 1-4. So after all has been prepared, then it will zero out all the nominal accounts. What remains will be your capital account. Okay, so that's how you prepare the closing entries. Next, we need to prepare the post-closing trial balance. So the amounts in the post-closing trial balance will be the beginning balances of accounts in the next accounting period. Okay. So this is how you prepare the post-closing trial balance. So again, you have the heading. And then what you will do is just make your balance sheet into trial balance format. So you have from cash to capital. So no more nominal accounts, meaning because it's after we do our closing entries. So what remains are real accounts or balance sheet accounts. So if you notice, we ended up with triple D capital na naman. Why the interchange? Okay, so we ended up with triple D capital or Abisario capital. Okay, that's then single rule, then get the total. It has to be the same amount. Okay, simple lang jud ko sa capital account. Okay, so the last thing we need to prepare is the reversing entries or are the reversing entries. What are reversing entries? These are entries usually made on the first day of the next accounting period to reverse certain adjusting entries in the immediately preceding period. Reversing entries are optional, meaning they are not required in the preparation of financial statements. However, they may be prepared to simplify the recording process in the next accounting period. Okay, so adjusting entries that may be reversed are accrual for income and expenses, prepayments initially recorded using the expense method, and advance collection initially recorded using the income method. So actually for you have accrued income, accrued expense, prepayments, expense method, advance collection or pre-collection, income method. So we have 4. So purpose of preparing the adjusting entries, I'm sorry, it's not adjusting, reversing. Purpose of preparing the reversing entries. One, to facilitate the recording of cash receipts and disbursements in the next accounting period. Two, promote convenience in recording the next period's year and adjustments for accruals. And to promote consistency of accounting procedure. Okay, so with the problem that we only have two reversing entries. We only have the accrual for salaries and the accrual for utilities because the unearned or the pre-collections, the method was used is liability method. So there's no need to prepare for um, the reversing entry. So duha lang. We have for the salaries payable and the utilities payable. So when you say reverse, we just reverse now the entry made during the time we do our adjusting entries. So when we adjust for salaries payable, it is a debit to salaries expense and a credit to salaries payable. So for the reversing entry, we just reverse the entry. So debit salaries payable, credit salaries expense. For utilities payable, we also have a debit during the adjusting entry or during the time you prepare the adjusting entry, you debit utilities expense and then you credit utilities payable. So this time, we now reverse it. So it's a debit to utilities payable and a credit to utilities expense. Okay, so this is the last topic that I need to discuss. That is actually the end of the accounting cycle. So thank